Welcome to This Explainer. Today, we're unpacking the massive macro trends currently fueling the global semiconductor industry, and then we're going to zoom right in on Analog Devices and their record-breaking Q1 2026 financial results. We're talking surging technological demand, some pretty harsh supply chain realities, and how the whole shebang actually hits the bottom line. Let's get right to it. Here is our roadmap for today. We'll kick things off with the global market revival, look at the AI demand driver, unpack some hidden risks and constraints, and then dive into ADI's record Q1 earnings, their financials and valuation, before wrapping up with the future outlook.
Starting with Part 1, the global semiconductor market revival.
Okay, to put this into perspective, global semiconductor sales hit an absolutely staggering $791.7 billion in 2025. And you know what? The momentum isn't stopping anytime soon. According to the world's semiconductor trade statistics, projections are showing another 8 to 9% growth mapped out for 2026. This is huge because it shows us an industry being propelled forward by massive, sustained capital investments in new fabrication facilities and advanced packaging all over the globe.
Next up, Part 2, the AI demand driver.
So what's actually under the hood driving all this? Well, artificial intelligence computing and high-performance processors are the primary structural drivers here in early 2026. We are seeing a literal explosion in data centers worldwide. The training requirements for these new AI models have just created this insatiable need for advanced logic and high-bandwidth memory chips. Just to give you an idea, logic chips alone generated over $300 billion last year.
A really critical perspective on this comes from the Rebound Electronics Q1 2026 report. They point out that AI-led compute and memory cycles are no longer cyclical, but they are actively redefining the semiconductor growth trajectory. So what does this actually mean for us? It means this isn't just a temporary spike or some passing fad. AI, right alongside the electrification of mobility, is fundamentally rewriting the long-term growth trajectory of the entire global economy.
Let's transition into Part 3, hidden risks and constraints.
Now, it's not all smooth sailing. Geopolitical instability, particularly over in the Middle East, is creating some really serious indirect pressures. It's causing wild energy price volatility, and remember, semiconductor fabs use a massive amount of energy. We're also seeing logistics and air freight disruptions around major hubs like Dubai. But honestly, perhaps the most critical bottleneck right now is industrial gas supply risks. Helium, which is notoriously difficult to substitute and absolutely vital for advanced tech like EUV lithography, the tech used to literally print the chips, is structurally tight. It's quickly becoming a hidden choke point across the entire global supply chain.
All right, Part 4, ADI's record Q1 earnings. So how does a specific player handle this? Let's look at the sheer velocity of ADI's growth. Their Q1 2026 revenue is up 30% year over year to $3.16 billion. But really, check out the leverage here. Their adjusted gross margin expanded by 240 basis points, jumping to a massive 71.2%. That level of operational efficiency meant their adjusted operating income jumped 47%, and adjusted earnings per share leaped an incredible 51% to $2.46. That is a total game changer.
Breaking down where that revenue actually comes from, we see some explosive demand. The industrial segment, which makes up almost half of their total sales, grew a really solid 38%. But the absolute standout, the communication segment. Driven by record data center orders linked directly to that AI boom we just talked about, it skyrocketed by an unbelievable 63%.
Let's move to Part 5, ADI financials and valuation.
This naturally brings us to the ultimate investor question. With all this incredible momentum, is this phenomenal AI-driven growth already priced into the stock? Basically, are you paying way too much to get in right now?
Let's break down the data. Based on metrics from Stock Analysis, the trailing PE is sitting at a pretty steep 75.50. However, the forward PE drops significantly, down to 34.26. What this tells us is that analysts fully expect earnings to catch up quickly to the current price tag. Now, a PEG ratio of 1.88 suggests the market is for sure heavily pricing in future earnings growth, but fundamentally speaking, the company is on incredibly solid ground, maintaining a very low debt-to-equity ratio of just 0.23.
But listen, ADI isn't just a growth story. They are a massive cash-generating machine. They pulled in $1.26 billion in free cash flow this quarter alone. Think about that. 40% of their revenue turning straight into cash. And out of that pile, they returned a full $1 billion directly to shareholders through dividends and stock repurchases.
That incredibly strong free cash flow is exactly what allowed ADI's board of directors to hike its quarterly dividend by 11% to $1.10 per share. And what's truly remarkable here is that this marks an impressive 22-year continuous streak of dividend hikes. They're consistently returning capital to investors while somehow still funding their massive technological growth.
Finally, Part 6, Future Outlook and Risks. Looking ahead, ADI is forecasting a brand new high watermark for their second quarter. They're targeting $3.5 billion in revenue, give or take $100 million. On top of that, they expect their adjusted operating margin to expand even further, approaching 47.5%, and they're guiding for an adjusted EPS of $2.88. They are very clearly riding both the long-term secular tailwinds of AI and the broader cyclical market recovery.
However, to actually pull this off and hit those lofty goals, they have to successfully navigate those hidden macro risks we brought up earlier. It requires a really delicate balancing act, pushing rapid data center innovation on one hand, while maintaining strict supply chain resilience on the other. They have to make sure they can source critical materials and manage surging energy costs amidst all this global uncertainty.
Which leaves us with the ultimate multi-billion-dollar question for 2026. As the unstoppable force of the AI supercycle meets the immovable object of global resource constraints, can companies like ADI actually maintain this incredible profitability, or will the macro environment eventually catch up? Thank you so much for joining me for this explainer. We will definitely have to wait and see how this all plays out.